Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 9th of April 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off as ever with a look at the price changes and moves to be aware of overnight and a bit of pushback really from commodity and trade related currencies against the US dollar. That's the real theme of today. We start with the Australian dollar adding 0.28% against its US rival, followed closely in tow by the New Zealand dollar adding 0.22% overnight against the greenback. The Canadian dollar was also up against the US dollar, taking 0.14% off of the US currency in the overnight session, and the Mexican peso taking 0.16% off of the US dollar, and those gains continuing into London trading. Dollar index for its part modestly down on the session, down by 0.8%, but the fall on a weekly basis is some 0.41%, so the trend remains downward in the dollar index for now. Let's see if that pans out across the rest of the week. And finally, just to reinforce the idea of commodity related currencies faring better against the US dollar, the South African rand better by 0.28% and closing back in on that 14 handle, that psychologically important number for the dollar rand rate. Okay, what's on the calendar? Events that may move the markets today. No real high impact data to speak of today, but plenty of mid and lower tier data to contend with. We've already had home loans data for February out of Australia and have a rare positive number from the UK housing market. Investment lending was also sharply better as well for homes, so that's good news too. Swiss unemployment bang in line, no change there, so nothing to really get excited about there. To come at 8 AM today, we'll have retail sales for February out of Italy. That's both year on year and month on month data, so a chance to see how the Italian consumer is faring, shall we say. And at 10 AM GMT we'll have the NFIB Business Optimism Index, if I can even say that, out of the US for the month of March. Fast forward then to 12:55 and staying in the States, we'll have the Red Book Index for the week of April 5th. Remember, this is a look at the performance of US chain store sales across the country. And then at 1400, hard on the heels of last week's non-farm payrolls number, we shall have the JOLTS job opening data for the month of February. 1400, there's the IBD TIP Economic Optimism Index data for the month of April, so another look at how the American economy and people within it are feeling about the way ahead. There'll be a 3-year bond auction in the States at 1700, and then we pause until 2030 when we get the API weekly crude stocks for the week of April 5th. This is the private sector look at US crude inventories, of course. And then at 22:45, to round off proceedings from the US, Fed member Clarida will be giving us a speech. That's not the end of the data for the day, however, because at 23:01 we'll get the British Retail Consortium like-for-like retail sales data for March. And then we hop over to Japan for bank lending for March, domestic corporate goods price index data for March as well, and perhaps most importantly of all, machinery orders for the month of February. All that data released at 23:50 GMT. Okay then, breaking news and comment that's caught my eye overnight. And first of all, Theresa May heads to Berlin and Paris today for talks with Angela Merkel and Emmanuel Macron around Brexit, ahead of the crucial, shall we say, summit, Council of Ministers there on Wednesday. Oil prices have continued to rise overnight on Libyan supply fears. The civil war, or the civil conflict, shall we say, has continued to escalate over the last sort of 48 hours. Chinese Premier Li Keqiang is in Europe today to meet with EU leaders, including Donald Tusk and Jean-Claude Juncker. And Israelis are heading to the polls in a general election today. The contest is a straight face-off between the Prime Minister Benjamin Netanyahu and the centrist collective leader Mr. Benny Gantz. And of course the outcome of that election could determine the fate of Middle Eastern politics for many years to come. Okay, food for thought then, something to take away with you into the trading day and beyond. Why not think about this? Is sluggish productivity growth in the West due to a lack of robots? An interesting question, and one that perhaps these two charts can shed some light on. The first of our charts looks at the number of robots per 10,000 manufacturing workers as of the end of 2017 and breaks this down on a country by country basis. Korea had the most robots at that stage, followed closely by Singapore, and then Germany was the front runner among other Western nations. The US I've highlighted here towards the top end of the table, but as you can see in Europe there's a far lower adoption of robots, and then the chart to the right hand side looks at the actual adoption rate of robots as a share of the expected adoption rate. Once again, Southeast Asia does very well, with Korea, Singapore and Thailand all employing quite a large number of robots, but Western Europe has been much slower to adapt. I've highlighted the US here as a benchmark, but here's the UK and here's Australia, so plenty of catch up here. Does that answer the question about productivity? Perhaps. Let's see what happens to productivity as and when some of these Western economies start to adopt robots more quickly. Okay, it's risk warning time. Please do take a moment to read this risk warning, as trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative, and as I say, please do take the time to read this risk warning thoroughly. Thank you for your time today.